Now, you and I both know, just so people listening to this, or these idiots don't know irrational stock moves. The point you and I are trying to make is that in the last 24 hours, two pieces of news have come out regarding Nvidia, neither of which are bullish. Okay. First of all, China basically saying, you know what? We don't want your chips after all. Okay. How that has not hit Nvidia at all, just so everybody's keeping score at home, China is the nest or the incubator, like the second largest AI incubator in the world. Okay, so that should matter.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. And I am joined, as always, by the brain trust himself, Mr. Chase Taylor. Okay, so we're doing this, market just closed. 1 o'clock just hit.
Speaking of, we forgot to do the market yesterday.
We didn't talk about the market yesterday?
We were like, we'll get to it in a minute, and then we just never did. I realized it later in the day.
Well,
not that anyone's really hanging on us for that when they can look it up, but
yeah. But today, there's one respect about today that is kind of funny, but doesn't surprise me at all, which is one of the things that we've said this week and yesterday, which is you really, for whatever reason, you cannot trust market moves and expect a bunch of weird looking stuff on Fed Day and the day after, even stuff that seems to conflict directly with what the Fed said.
And tomorrow's options expiration, so you can't trust it either.
Right. I think the latest example of that to me is a big, huge rally by the most expensive and biggest stock in the stock market based on the fact that they're going to loan another company some money.
Taking a stake.
They're taking a stake.
Right. And like some sort of production partnership of some sort.
Okay. So here's the funny part of that. Okay. So if you do some math on this, so Intel right now is valued at what? 280 billion, something like that.
Might have to look it up. Sure.
Okay. Let's call it 250 billion. So if you buy a 5% stake in Nvidia or in Intel, okay, you effectively bought $5 billion stake is about a 1.7% take in the company, right? Well, at $4 trillion, their stock's up 3.7% today. That's like an $85 billion market cap based off a $5 billion investment.
Right.
If the market move in Nvidia's stock is correct, we should just YOLO the entire portfolio on Intel. You know what I mean? We're guaranteed. What would that be? Would that be a 16x return? Something like that? 14x return? I mean, the market just gives them a 14x return on that $5 billion, just like that.
Right. And
it's good times.
Let's be honest, like you working with a company that's like obviously inferior to you, like why is that good for you? I was thinking about the old SNL Jimmy Fallon skit today where he was like an IT guy and he would like come to someone's computer at work and they'd have a problem and he'd be like trying to walk them through it. And inevitably, the person couldn't figure out what he was talking about fast enough. So he'd get frustrated and just yell, move. And then he would sit down at the computer and do it all himself. That's how I've imagined this going, where the NVIDIA engineers just like, move.
Yeah,
like, get out of the way. Like, let me show you.
Well, to me, what this sounds like is a classic scenario of going, hey, we got to build up manufacturing capacity here in the United States. So the government is going to take an equity stake. And as long as you want to avoid certain tariffs that involve your products, you better pony up too.
It was definitely a political marriage.
Yeah.
There's no way NVIDIA is like, you know what we should do with our time and our money and our human capital? We should get involved with Intel.
Now, you and I both know, just so people listening to this, or these idiots don't know irrational stock moves. The point you and I are trying to make is that in the last 24 hours, two pieces of news have come out regarding Nvidia, neither of which are bullish. Okay. First of all, China basically saying, you know what? We don't want your chips after all. Okay. How that has not hit Nvidia at all, just so everybody's keeping score at home, China is the nest or the incubator, like the second largest AI incubator in the world. Okay, so that should matter.
And if you look at energy production, likely to become the biggest at some point in the future.
Right. And so when I look at the combination of those two things, and that stock going up 5% in the face of that or something like that, I am not at all making the argument that a year from now we won't look back and think that Nvidia is worth more than it is today,
Sure.
even these things included. What I do think it's important to note, though, is I think that this is another really good example of mechanistics or euphoria and market mechanics driving stock moves in the face of fundamental things that should be pushing it the opposite direction. Right.
Right.
And I know we've talked a lot about that a lot, but I think that's one of the things that we always have to remind ourselves in this market, both to be able to internalize and digest news and moves, but also to stay sane, right? Like, just because you're going to see these moves where you're pulling your hair out. I personally believe that we've crossed the Rubicon where I think that moves like that need to be faded.
Yeah. So I just looked it up. So like 13% of the revenue comes from China. However, 47% comes from Asia. And I'm not saying all of that finds its way into China. What I am saying is somewhere between 13 and 47 is finding its way to China. I would say 30-ish. Total guess, but if you really are about to lose somewhere between 13 and 30% of your revenue as a company that
I think you're being kind,
hinged on growth, you have and the stock's essentially flat since that announcement because it, largely because it jumped today on, them basically investing and working with a very inferior company because they have to politically. Like it's a head scratcher, to say the least.
It's not the kind of thing that you're expecting to tack 120 billion onto a company's market cap in a single session.
Right.
I think that's a fair way to put it.
With that said, I hope this works. Like, hopefully, I hope they make Intel better and the whole thing works out great. And
look, I didn't talk about it from Intel's perspective. Yeah. I think Intel has a lot to gain from this.
You can't lose for them, right?
Yeah. Oh,
that's what you get when you get the ultimate sugar daddy as a shareholder.
Yeah,
you get some favors.
100%. Yeah, for Intel. I mean, I'll be honest with you. I saw that announcement come up. Now the stock pot, I hate buying a stock right there.
Sure.
But but hey, just if you go look at the numbers, if there is any positive acceleration in or momentum in Intel's business at all over the next 3 to 5 years, the stock's a buy here. I mean, again, it's cheap here if there is acceleration in their core businesses. Sure. And they improve. It's not an expensive stock. So I saw that news come out. I think the move in Intel is completely justified.
I mean, we even took a shot at it. I think it was last year.
Yeah.
There's reports of a chip coming out that sounded like, hey, this thing might be competitive. Took a shot because it was very cheap. Turns out that the chip wasn't what they said, more or less. So it went, to a new low. And now you've popped out of that range, kind of like the exact technical move we looked for, but now it's on, Uncle Sam and Jensen buying a bit,
Yeah. It just, if you want to try to make that move make sense, good luck.
I put it out to everyone on Twitter today. I was like, hey, am I missing something? Is there like a real thing here where like this could actually help Nvidia in some way? Like obviously it helps, Intel, but like, is there a way this could be good for and nobody, and I even had a few people respond like, yeah, I tried to think this through. Like I came up with nothing. Like,
okay. So and just to revisit this, your estimate on that percentage of chips selling in Asia, I think you're being really kind. And here's the way I'm thinking about it. What do you think the chances are that if we look at Asia proper compared to China, like if we X China out, I find it really hard to believe that China is not buying as many or more chips than the rest of Asia combined. I just have a hard time believing that.
Yeah, I mean, Japan and South Korea are pretty significant markets, but most of the exports go to Singapore, and and then we talked about things.
And I'm sure they're all staying in Singapore,
and everyone,
right?
And everyone claims like, oh, like 90% stay in Singapore. Like, I don't believe you.
No,
I just don't. Like Singapore's like this big, first of all.
DeepSeek didn't come out of Singapore.
Right. And they have Nvidia chips.
Right. I just don't buy that. They're going from Singapore right into China. There's no way. I mean, look at the scale. What is the population of Singapore? Is it 16?
So literally more of their revenue comes from Singapore than China.
No, I mean, that's
18 to 13, I think it is.
There you go. There's your answer.
Like,
I mean,
no,
full stop.
I don't know what the number is. I just know it's not actually 18 to 13.
So I think you could sit there and say, I mean, I think a conservative estimate would be 50% of that chip numbers is China demand.
Yeah, that would put it. My 30 numbers about that. So
yeah.
Maybe I'm wrong and it's 20 something, but
so I'm not saying
20% of your revenue is gone. And assuming they fall through and they really don't import anymore.
Well, the other thing that you and I said, if you can take them, if they really mean what they say, and this isn't some, grand strategy from this, which you can never say it's not the case, right? It could be a smokescreen, but
negotiating tactic or whatever.
But assuming that's the case, that doesn't mean that they don't have no interest in being involved in AI. That means that they believe that they don't have a need for those chips.
Which news has come out this week that the Huawei chips are just getting that much better. We know, Alibaba's making their own. Multiple companies are making their own.
Yep.
They're even doing lithography stuff themselves. That's always been like the big bottleneck. And if you have anyone out there, if you've ever read about how the lithography stuff works, the way they etch things into the silicon using light, it's mind blowing, and it's obviously shockingly difficult to do. And don't get me wrong, China cannot do it to the same like specifications and detail and stuff that ASML can. So it's still a bottleneck for them. But all of a sudden, on the like higher nanometer stuff, it looks like they can actually do it themselves domestically with their own companies. And obviously, it's a matter of time. Like they can pick up. They're the ones getting all the PhDs in this stuff, not us. So, it suggests like their domestic chip industry, the whole supply chain has improved dramatically in the last year or two, and way more than anyone in the West expected, and that has consequences.
Well, and it's just so funny too, because one of the things that we've been looking at is, and we've talked about this so many times about Nvidia. That competition is going to come, that other chip makers are going to come, but until you see them, they really do have this monopolistic like position in the marketplace, right? This is the first piece of news that I have seen come along that could absolutely suggest, at least in the short term, that demand has peaked for their chips and it will start moving the other way, right?
That incremental demand, at least. I mean,
for the market, where you look at where this thing is trading, for the market to not even consider it, that is mind blowing to me.
Right.
Like now, if this thing's trading at 18 times earnings or something, I get it. Okay. But it's not. It's trading at almost 60 times earnings with 70% margins.
Right.
Right. And remember, those margins only exist because they're the only game in town. So if we've got a reduction in sales coming to one of their biggest, the second biggest country that buys their stuff, and the reason they're doing it is because they have an alternative, I don't understand how that doesn't at least suggest, hey, strong possibility of a demand compression and potential margin compression in the next 2 years.
Right.
And the market just looking right past it.
And it feels like too big of a thing to be. There's no point in bluffing on something this important. That's kind of the way I view it. Like,
well, no, because the real data flow of the chips would prove them wrong inside of a quarter, right? Like meaning tracking the data of where chips
and the AI models and everything. Like, if all of a sudden China starts losing, head-to-head AI battles, like because they just wanted to be tough over chips, like they've done plenty of dumb things over their history, but I don't think they're that dumb to where like, you know what, we'll sacrifice the AI war so we can just use in-house chips. Like,
and to be fair to them, unlike Western democracies, they really don't have in this recent iteration, obviously Mao and going back to that era is a totally different story.
A little bit different.
Well, because they did this all the time. But this latest iteration, if you notice, they do not have a track record of cutting off their nose to spite their face. You know what I memean? Look at Western democracies. I mean, that's pretty much all we've done for the last 25 years, right? They don't. So I don't see them doing that, right? It makes no sense. And it's just art. Again, I'm not saying that this points to anything, but it's just one of those observations that when you're a student of markets and you're involved in them, you know, all your career, for me, you're used to the way they work. And to watch the market just not price things in, it's just, I'll never get used to it. You know, it's just not the way it's supposed to work, right? Where it's supposed to be a reflection of all known data, and it's just not. And you can point to so many different companies, so many different examples. So,
For sure.
What else did we see interesting on the day? What else caught your eye?
So data wise, last week we talked about we had a pretty nasty pop in jobless claims. That moved the market. You do a little work on it after it became clear, like, oh, it's one state, it's Texas, and Texas had like a deadline for like the flood victims. Clearly, it was a giant surge in fraud, people trying to get some money from that. So like this week it became pretty important to look at. It was pretty clear it was going to go back down because it was, you know, fraudulent claims. But we went down. Not only did we go down, but lower than expected, which tells you that, again, the job market obviously has eroded, but it's not bad. We're not seeing a bunch of people getting fired. And continuing claims, which is people, you know, trying to get back into the labor force but unemployed, that number is the lowest since May. So both of those are suggesting a labor market, maybe even short-term is bottoms, not, you know, like it's not getting worse still. Which if inflation keeps moving and the labor market can actually bottom, then it makes it's a tough spot for the Fed with, you know, all these cuts baked in. If you have 3.5%, 4% inflation at some point next year, and people are looking at you like, you're still going to cut, you know, if unemployment's still 4.4, 4.5 or whatever. So that was interesting to me. Good sign for the economy. Maybe awkward sign for the Fed, given how dovish they have pivoted to, because they're a 3-month moving average of the data. That was another big thing. And then if you want, I can remember to go through the market this time.
Oh yeah, give it a rundown. I mean, nothing crazy, nothing eye-opening.
S&P up about 0.5%. Q's basically doubled that. They're up 0.9. Both of those good, decent amount off the highs of the day. Small caps though, absolute ripper, up 2.5%. And that encapsulates what I'm seeing with the Fed and investors, the market, both. And that is, the markets and the Fed are all pricing in, we're going to get a bunch of cuts and it's going to save everything. We will have no economic problems because the cuts will save us. The only way to get IWM up is rates down and economy's fine. Like, because if the economy comes down, their earnings get smashed. If rates don't come down, they have that floating rate debt problem. So they require Goldilocks. And for the moment, the markets are living in that imaginary, at least, Goldilocks. So I find that interesting. Equal weight was up about 0.65. Mag 7 only up 0.34. The rest of the world was up 0.13, and that's because the dollar was up 0.37. The dollar looked like it was making a secular breakdown yesterday and then just ripped back the rest of yesterday and so far today. Oil down 1%. Ugly day for nat gas on the front month, down 5%. Gold down 1%. Silver basically flat. Gold miners basically flat. And then the 2-year was up 2 basis points. The 10-year also up about 2, although the 30-year up 4 basis points. Now those all got, you know, rocked. They're well below the recent highs, but you know, the 10-year was actually at 4, and now you're back up to 4.11, and the 30-year's at 4.7. So it's not like it's that low.
That's wild to see, man. Palantir trading at 600 times earnings at a $420 billion market cap.
It's kind of funny to I was thinking about this the other day, to reflect on the fact that all the insiders there just hemorrhaged their shares,
just
right?
Dumping.
Now they look like the dumbest people alive because a lot of them just.
There is nothing more this market than that fact right there.
They're the idiots for dumping it, you know, 500% ago.
Yeah, it's so wild.
Even though in real life they were obviously very smart for dumping it at where it was back then.
Yeah, at the valuation they dumped it at. I mean, look, yeah, they've been proven wrong. That company is still way overvalued based on where they dumped at.
It's crazy. Yeah.
Yeah, it's.
Hey, I was thinking about this the other day. We talk about Tesla, how it's different. Obviously, Palantir for now, just different. Clearly, the people that go along these things, they're literally just playing a different game than we are. Like, just literally a different game. Like, that's to me the only way to think about it. They're not optimized for the same things, you know, real investors are optimized.
They're crypto investors,
right?
It's the same. It's the same thing.
Right?
Yeah, it's the same.
It's the same thing as buying a Kalshi contract on who's going to win an Emmy or something. Like,
yeah, they're hodling.
Let's see what happens.
Yeah, only difference with these though is that if you buy the underlying, you just don't. The option doesn't expire. You know what I mean? You don't have a time limit on it, and there's been a lot to support that, right? I mean, there have been a lot of stock moves where, you know, we're talking about two companies right now that went to places where you could have told me all of the news ahead of time, and you could have given me the financials.
Right.
You could have given me everything. I wouldn't have either one of those companies pegged anywhere close. I still would have lost money. I'm glad I didn't go into the future and been given the financials and all the quarterly calls, but not the stock prices, because I would have gotten smashed.
Right.
Having known everything, I would have gotten wrong. I'd have gotten it wrong.
And we had similar takes on Nvidia, whatever it was, like 2 years ago. But at least that one, if you showed me under the hood in the future, I'd be like, oh well, never mind. Like that's pretty insane revenue growth. Like that's fine. I can get that.
Yeah.
Whereas with these, it's like so far, like especially Tesla, but just at least there's a growth story to sell for Palantir. Not at that multiple, obviously, but like you can sell like, hey, look how we're growing.
Yeah.
Versus, you know, the car company that can't even grow. But
well, I mean, yeah, Palantir has headlines that they can put out to make people go, wow, that's impressive. Right. I mean,
and it's sexy. They do cool stuff, and yeah.
I mean, are you getting long Tesla here because you think their growth is only going to contract high single digits? Do you know what I'm saying? Like, right. What's your? Well, it's because they're going to do robots, and I'm like, yeah, and semis and roadsters and Neuralink and all these things too. I realize that. The problem is, once again, if I look at Tesla's income statement, 95% of the revenue comes from automobiles. So you've been telling me all this, but I haven't seen it yet. But I think it's that hodling mindset, right?
Right.
And you know, once the stock gets a reputation for moving, you know, in an antithetical way when compared to the underlying data, I think that further supports those hodlers' attitudes of, oh, these people just don't know what they think. Just buy it. It's one decision stock, right? Just buy it and keep it.
It's like lottery tickets. If you look at the data to see the percentage of people that are poor that buy lottery tickets, and then the percentage of their income, it's mind blowing. Like it's something like the lowest, you know, decile or whatever of income spend $400 a year on lottery tickets. Now, if they had a $400 emergency, they're out of luck because they don't have $400, but they spend that on lottery tickets. Now it actually logically makes sense because they're just like, they're trying to win so that they can buy even more of the necessities they already can't afford, kind of thing. Like, it's not insane. It is insane, but it's not. And I think about this, if you think about a young nihilistic type investor that's kind of in crypto and takes huge shots at a few, you know, popular stocks on the internet or whatever, like that's what they're doing. It's like, it's a similar, like it's both insane and not insane at the same time.
Yeah. Well, they also haven't seen periods of times where market darlings like Microsoft just ate it for 12
right.
years.
Yeah.
Right?
If you're under 40, really under 50, yeah, you don't even know what that looks like.
Well, and also, man,
other than 2022, which was, you know,
there's a
haircut, but
there's been a massive cultural shift in society in general, and then also in the marketplace where, you know, at least that's what I think, because I can't explain it, and I can't get it to wash. Meaning, one of the unique things about this market environment is that it's also grabbed so many more experienced people that you look at it and go, you should know better than that, right? Meaning, like, not the part where markets have proven that things can continue in upward trajectories far longer than people think. But usually that was synonymous with companies can continue growing and expand markets much further than people think, right? Now the attitude is stocks can continue growing much further than people think, and they don't even need the growth to go with it, right? Like it's like saying we've separated those two things, or that we think those two things are not, what it's not, that they're not mutually exclusive when they should be.
I mean, Tesla proves you don't actually have to grow to keep a crazy multiple.
No, you can actually have multiple expansion while you're a melting ice cube, which is wild.
Yeah, and your competition is getting better all around you. Yeah,
it's certainly a head scratcher.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
What else did we see today? I'm trying to think. It really looks like to me that, especially if you compare the Qs and things like ARC to Meg 7, it looks to me like one of the things that we talked about earlier in this year. It's been a while. But we were saying, if you're betting on a rally, this was probably only in the last month we were talking about this. We're saying if you're going to bet on a rally in the market, if it was me right now, I would much prefer to bet on the bottom half of the NASDAQ as opposed to the top.
Right. 100%.
Right. And if you look back, that's the way these things have worked. The Meg 7 has always led to new highs, and then the rest of the market or the other stuff kind of plays catch up in their shadow. Right.
The 2021 graveyard is rocking and rolling. And that's in a lot of those companies, like they really like really low rates. They like speculative excess. They like liquidity, then that's the environment we're in. So a lot of these, and when I say 2021 graveyard, I mean the stuff that went straight up in 21, straight down in 2022.
Zoom
is a perfect example. Lyft, Rivian, Zillow, like there a lot of these things. You go look at these charts and you're like, oh, one that hasn't really gotten there yet that we like potentially is Snap. Like a lot of these straight up, straight down, sideways, coming back to life. The ARC chart itself. The ARC chart is actually reclaiming its like long-term uptrend line that broke. That we looked at it today. That blew my mind. Like you're above that long-term uptrend line, which you had spent years under, which says a lot.
Yeah. Hey, well, Kathy. Yeah. There's a biblical term. There's a biblical verse, like a dog returns to his vomit. Right. That's kind of what. The other funny
that is basically my technical strategy. So
yeah, hey, in this market, that's the way it's worked. I also think that we need to stay open to that being kind of a condition of permanent liquidity, meaning you have seen, like there's kind of these magic numbers. You could kind of compare them to Fibonacci type numbers, right? Where when any asset drops like 85% from its peak, it almost never reinflates. Like there's so few examples, right? We have so many examples of that being flipped on its ear. And I think a part of that is just perpetual liquidity environments, right? Meaning the reason speculative excess that is caused by too much liquidity or ends up resulting in too much liquidity, or it's like it's a mixture of the two, leads to a lot of higher asset prices, right? But central banks were okay letting the tide go out in the past. They don't do that anymore.
Right.
And so it kind of makes sense when you think about it. With every single market pullback, we just pump way more liquidity in, and it's got to go somewhere. And so you reinflate the stuff that got beat down the most. And that stuff starts running. Everybody's more chart driven than they've ever been, right? Everybody jumps on the deal and you just ride that sucker right back up. And I think that's been a big part to play in it, this perpetual liquidity. Nothing gets left for dead, right? No matter what. Even if the underlying business is shot to hell, everybody's like, well, yeah, but look how much it's dropped to get back there. It's one of those things. Got anything else?
No, I think we're good. Well, one last thing, and that's you'll be solo tomorrow because I'll be traveling.
It's going to be a good show then.
You're going to be the best. Speaking of the one with Eric Bowles was awesome.
Oh,
so
thank you.
If people haven't checked that out, they definitely should.
Yeah, he's a well, I feel like my life's example of it. I mean, if you want to know how to get your stuff on the right track and start making some progress in life, he's a good guy to listen to.
Yeah, he had some. Obviously, it's better than just one-liners, but he had some one-liners that were really, really good.
Um, I I would have to assume that in the top 5 of the one-liners had to be when he said that in high school I was unjustifiably confident.
Yeah, and I think he said 5'4", if I'm not mistaken, there when we first saw you. So
Oh man, I think he was being a little unfair, but yeah,
out on the football field biting ankles, getting after it.
yeah, I probably looked 5'4" on the football.
I can't
field.
talk. I was 6 foot, but I weighed 150. So if I got hit hard, I might break in half.
Yeah, 5'9", 200. I was like a brick with legs and short legs at that.
If you hit me, it would have hurt.
Yeah,
so.
there you go. There you go. That was one thing I was good at. Just 5'9", 200 doesn't really reek of speed. You don't think, doesn't say Porsche.
I'd put you at D tackle and let you get after it, but
Did do some time at nose tackle.
there you go.
Yeah. So
No one's blocking that.
no, I actually was leading the league in sacks until I got double teamed and dislocated my elbow.
But I think short defensive tackles is a hack no one uses. But
I think you can make the argument, especially as it relates to run support for middle linebackers too. I think it's one of the most overrated stats.
Zach Thomas was pretty good. So
yes, he was. It drives offensive linemen crazy because they can't see you.
Yeah, that guy was small and he has a gold jacket. So
and he could hit like a freight train. All righty. Well, that does it for us. I'm sure you guys would like to hear more of our football musings, but we'll spare you that. Anyway, have a wonderful night. As always, get our stuff, knowyourrisspodcast.com. Search Know Your Risk Podcast on YouTube. Get the video feeds. Check us out on Twitter at KYR Radio for me, at Pinecone Macro for Chase. Anyway, have a wonderful evening. We'll see you guys tomorrow. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.